Monetary policies of the US Federal Reserve and the European Central Bank continue to diverge. Good news or bad news for you as an investor? Here to discuss how to weatherproof your investment portfolio in this environment is Credit Suisse's Global Chief Investment Officer, Michael Strobaek. Michael, the Fed has confirmed that it's ready to raise rates sooner or later. What will this mean for investors both in the short and long term?
Well, the short-term effect is that interest rates on the short side are going up, and however, going into the first rate hike, it means that the yield curve is generally flattening, and this means that the overall interest rate environment on the long end is actually going to perhaps stay where it is or go down a bit. We expect the first rate hike, just to say, by mid of next year. So this will take us out of the long era of almost zero interest rates in the US. For equities, it is normally not such an issue around the first rate hike, and normally also cyclicals on the equity side actually start to outperform. And lastly, on the FX side, we do believe that this development is supporting the US dollar quite well.
The ECB, on the other hand, has just announced even lower rates as the economy is stagnating and inflation is falling. How can investors best position themselves in this environment?
Yes. The ECB is going the other way. There's an issue of growth and there's an issue of disinflation in the Eurozone. And the ECB will need to begin meaningfully expand its balance sheet. And that is supportive for interest rates overall in the Eurozone. We believe that in particular credits and on the high yield side, subordinated loans will be interesting investment opportunities as a consequence of what the ECB is now doing.
So what opportunities does this bond market divergence currently offer?
Well, overall, the opportunity means that interest rates in general are quite, if you will, capped. And we've taken sort of this conclusion to an action of actually now going neutral overall in our duration or interest rate strategy. And it means, and will continue to mean, that equities are very well supported, in particular in the Eurozone. There's a reflation, if you will, going on. And it also means that one of the most interesting opportunities is actually to be, if you will, long the US dollar versus the euro.
Thanks a lot, Michael.
Thank you.
For more information on market movements and global trends, check out news and expertise on the Credit Suisse website.